Have you done reading? Sagar, can you hear me? Right. So, three parts. Evaluate economic value added for each of the two divisions. So, they have given us some details, right, with regards to the two divisions. So, we need to calculate the EVA for both. Then advise the directors of G whether EVA is a more suitable tool to measure divisional performance than performance measures currently used. So, there we have to see what they are currently using and then talk about the pros and cons. And suggest whether EVA would be a better choice. Then assess how a BBM approach can be used to improve the performance of G. So that is basically advantages of EVA. You understand how BBM approach can be used to improve the performance of G. Of course, we need to tilt it towards okay, EVA is predominantly a measure, but to get positive EVA, how do we change our activities, get the focus towards shareholder value maximization, right? So first let's do this one, economic value added for each of the two divisions. How much do we take as operating profit? Yeah, but now if you see, now you have profit before interest and tax 12 million and 11.2. Is there anything that we should add back? So we have the revenue, then lease, advertising, accounting, depreciation, non-recurring, non-cash expense, movement in provision for doubtful debts, other operating cost, and apportionment of head office cost. So our operating profit should be 12 plus 4, 16. Yeah, accounting and economic depreciation, that we anyway have to adjust later, the plus and minus. Yeah, all that we can adjust later, but this apportionment of head office has to be added to the operating profit at the start. Okay. So it will be 16 and 14.2. Then we do the rest of the add and deducts. Huh? Yeah, I have told them. Yeah. Salam. Ramli mama print out එකකලා මේ question එකක් දැම්මා පොඩ්ඩක් ගෙනත් දෙන්න කියන්නේ මේ නම් එකට තමයි දැන් මේ WhatsApp කරේ. Right. For now you can look at the screen, no? These are the content. Right, so add the, we can do the accounting depreciation, which is 10 and 5. But then they're talking about economic depreciation, isn't it? So that we need to deduct economic depreciation. Which is 9 and 4. Then you have increase in provision. The provision reduces, we will deduct. If it increases, we will add back, because there is no cash flow movements. 8 and 1. If there is non-cash, non-cash is no cash flow movement, so we need to add it back. 0 and 5.2. Then there is advertisements, 2 and 0. Now earlier there was operating lease, which was treated as finance lease. Now everything is one, isn't it? There's no separation. So 0 and 60. So we need to deduct the tax as well. Huh? Yeah, we treat it as a capital expenditure. Tax 1.8 and 1.6. Then we also need to bring in LTRI, plus tax relief on interest. So interest is 5, tax is 25%, so 1/4. So that is 1.25. So we'll take it as 1.3 because we are doing one decimal. Now look at the sum, right? Now there is a head office cost, isn't it? 4 million. And according to this statement, they have calculated tax after deducting the head office cost. But apportionment of head office is not an allowable expense. So then we need to remove the tax saving that was applied on that as well. You understand? So tax on head office. So 5 into 25, sorry, 4 into 25% is 1 minus 1. and then 3 into 25%. 0.75. So you can take it as 0.8. So that should give you your notepad. $22.9 and 33.7. Then capital at start 500 and 292. There's no adjustments to make. Then we need the WACC. Cost of equity 12%, post-tax cost of debt. So since the post-tax cost of debt is given, you don't have to deduct the tax part. You can take it as it is, 8%. Ratio of the market value of debt to equity 1:3. So 1:3, 0.25 into 0.75, right? So 0.25 into 8 plus 0.75 into 12. So your WACC is 11%. Therefore, EVA $22 minus capital employed multiplied by WACC. Take WACC as 33.7 minus 292 into 0.25. 1 1.58. Got it? Any questions? Yeah. No, it's at the start. No? Yeah. Because the impact is at the end of the year. No? Yeah. Exactly. So the capital that you have at the beginning is the money that you start to do your business in that year. It's something like the matching concept. Right? And this accounting in the income we are adjusting it. So the profit will reflect that. And when you go and add your retained profit to your capital, next year one is also adjusted. Exactly. And when that capital is taken to economic value added calculation, you have already adjusted. That's the thing. Hari, can we move to the next one? Right, look at the last paragraph. Okay, the question is advise the directors of G whether EVA is a more suitable tool to measure divisional performance than the performance measures currently used. What are the performance measures currently used? Exactly, ROC and EPS, right? There may be disadvantages in using economic value added. I think that overall it's a better performance measure than ROC and EPS, which we currently use. Advise whether EVA is more suitable to measure divisional performance than the performance measures currently used. Now, in answering this question, you need to look at certain things. What are the advantages and disadvantages of the current measures? What are the advantages and disadvantages of EVA? And most importantly, what is suitable for the divisions? Now, for example, if you take EPS, earnings per share, is not relevant to the debt holders. No? I mean, directly speaking, it is more relevant to whom? Equity shareholders. Return on capital employed, yes, for everyone. But the problem is it is diluted by accounting conventions, practices, depreciation and all that. Strictly speaking, we know EVA is the more suitable measure for shareholder wealth addition, isn't it? Right. So it's a listed company, right? Objective is to maximize shareholder wealth. Right, okay. Targets on EPS set by the shareholder. The board believe that a capital intensive business return on capital employed is more appropriate. Right, take down. EVA is considered to be a superior measure in identifying shareholder value or shareholder wealth, compared to any other technique. In the case of G, the objective is to maximize shareholder wealth. EVA directly measures this objective. ROC although looks at the returns for capital employed, these figures are subject to accounting adjustments. These figures are subject to accounting adjustments. However, the good side is it's easy to understand, and performance is captured in a single digit. EPS on the other hand is more suitable equity shareholders, which highlights the earnings made for each share. The earnings made for each share. EVA, EVA, with many advantages, such as so now we could write about 4 or 5 points the advantages of EVA and then conclude, right? Such as one below the other, you can say avoids accounting figures and provides a realistic figure which shows the value addition next. By incorporating the cost of capital, EVA provides a clear picture of a project or division's profitability, making it easier to decide where to allocate resources. Next, bringing in the cost of capital will make the managers understand and be accountable towards their decisions on overall company profitability, and operations. And there are so many. So if you can write about 3 or 4, that would do. But we need to talk about the negatives of ROC and EPS. That's the key thing, because we are saying EVS better than these two, no? Right? Number 3, assess how a VBM approach can be used to improve the performance of G. Right? Look here. The question is, assess how VBM could be used to enhance performance, isn't it? Right? Now, this is the one. In answering that question, you need to capture these 4 points, because this directly talks about that exact point. Assess how VBM approach can be used to improve the performance of G. So number 1, you must have a strategy in place. You get it? A strategy developed to maximize shareholder value. Then performance targets created for value drivers. Right? Value drivers are things that will give you value. Revenue, reduction in cost of capital, reduction in tax, right? Reduction in working capital. Then operational plans. That is where we come up with targets in the short term. And finally, for those targets, when employees achieve, you need to attach rewards as motivation. Okay, take down. I'll give it in a more simpler form. Need to develop a strategy. Need to develop a strategy. And objectives set. Next, value drivers should be identified. Which are short and long term. Which are short and long term. Comma, financial and non-financial. Next, focuses on critical success factors. Focuses on critical success factors. That will add value to the business. Next line. The above need to be adjusted. The above need to be adjusted to suit the divisions next. Come up with a plan, budget, targets. Come up with the plan, budgets, and targets which focuses on the achievement of the overall objective. Finally, rewards linked with the targets. Rewards linked to targets. Rewards linked to targets. With constant monitoring. With constant monitoring. Right, let's see the next question. Guys, now in this, the first part is explain to the CEO what VBM involves and how it can be used to focus the company on shareholder interest. So it's pretty much the same question. Okay, so let's skip that. Let's move to the B part. Do the calculations. Perform an assessment of the financial performance of LOL using EVA and evaluate your results compared with those of earnings per share growth and share price performance. You should state in assumptions made, right? Between 2009 to 10, we need to calculate the EVA and also come up with the EPS, right? And check the movement of the index given between 2009 and 10. Right. Let's quickly do the EVA part first. No, not many adjustments. Few data given. Let's do that first. Profit after interest and tax 35 and 26.8. Then interest net of tax, how much? Interest is 4 and 7.8. So tax is 25%. So 4 into 75 is 3. 7.8 into 5.85, 5.9. Right? Then NOPAT. Huh? Yeah. Then capital employed at the beginning, how much for 2009? Yeah, exactly. 99.2. And for 2010, it will be 104.1. WACC needs to be calculated, right? So WACC for 2009 should be 0.5 into 12.7 plus 0.5 into, now here here also they have given you post-tax cost of debt, so we can take it as it is, no issues. 4.2. So that is 8.45. And for 2010, it's 0.5 into 15.3 plus 0.5 into 3.9, 9.6. So now we can calculate the EVA, which is capital NOPAT minus capital employed into point 0845. $32.7 minus 4.1 into 0.096. Okay, so 29 and 22 point. EVA okay up to that? All right, below that EVA calculation, quickly take down these assumptions. If they ask assumptions, write this list. Right, assumptions. Now, in this sum, they did not give us accounting and economic depreciation, isn't it? So the assumption is they both are same. Hence, no need for adjustment. So number one, economic and accounting depreciation. Economic and accounting depreciation are same. Number two, there are no non-cash expenses. There are no non-cash expenses to adjust in the profit figure. There are no non-cash expenses to adjust in the profit figure. There are no operating leases. No, I got that. Yeah, then next one, there are no additional adjustments to make regarding goodwill. Right. Now, if you see, the question also wants you to evaluate, look at the other measures that are given along with the calculation of EPS. So now we need to look here, show all this here. Okay, comparison of EVA, EPS, and how the stock market data have moved. So there we can show the increase or decrease. Calculate the EPS. Calculate the EPS and tell me how much. Okay, EPS, we can take profit after interest and tax, which is 35, divided by the average number of shares, 160. Then 26.8 divided by 160. And change 1 minus 23.4. Right, look here. EV, of course, we can't say compared to this, no, because your numerator, denominator, all that is different. You can't do a like with like comparison, but you can say 2009 we made 29.6 and 2010 we made only 22.7. But still, value has been added. How is that? But look at EPS. There's a drop of 23%. Main retail index dropped by 34%. This is something equal to all share price index, ASPI, right? Share market all share index. Then retail sector index dropped by 25%. Company share price dropped by 12%. What kind of conclusion can you make? That's the most important thing. What kind of conclusion can you make here? Better. Exactly. Right. Although the market dropped by 34 and 25%, our price has dropped only by 12%. That shows that the investor confidence in our company is what? Still remains same. You can say, okay, March slight drop, but it's not a major concern that we need to worry, right? Take down. Correct, Sagar. The performance of the company has declined. The performance of the company has declined. with earnings per share, with earnings per share falling by 23%. This would mean shareholders will not, this would mean shareholders will not favor the company, within brackets normally, yeah, normally. However, the share price seems to have held up. The share price seems to have held up with a decline of only 12%. Compared to a fall in the sector, of 25.9%, and market as a whole of 34.8%. The sector comparison is more relevant. The sector comparison is more relevant. To the performance of LOL's management. As the main market index, will contain data from manufacturing, financial, and other industries. Shareholders will be encouraged by the implication that market views LOL as one of the better prospects within an outperforming sector. The above view is consistent. The above view is consistent with the positive EVS generated although EVA has fallen from 2009. So stop. The point is, EVA remained positive. Hence, the company continued to create. Hence, the company continued to create value for its shareholders. Value for its shareholders. Even in the poor economic environment. Hence, it remains a worthwhile investment. Okay, C part, evaluate VBM measures against traditional profit-based measures of performance. Underline the word evaluate. Evaluate VBM measures against traditional profit-based measures of performance. Here, you answer. Positives or negatives? Two positives and two negatives. Now pay attention. Now, question says, evaluate VBM measures. So then we need to go here. VBM evaluation, not EVA evaluation. No? Some part of EVA evaluation is also applicable because EVA is part of what? VBM. Right? When you say VBM, all three will come into play. EVA, MVA and SVA. Economic value added, market value added and shareholder value added. Market value added is the accumulation of economic value added. Shareholder value added is discounted cash flow. That's why I always say theoretical knowledge on APM is very important. Basically, the technical content, yeah. ROC, EPS, NP margin, GP margin, all are profit-based measures, traditional profit-based measures. The biggest problem with them is accounting, concepts, conventions. Whereas in VBM, we eliminate these non-cash flow items, isn't it? We look at it from an angle of value addition as against accounting profit. Let's take a break and come back. Done. Right. So write a report to the board of Saffron. So the moment you see the word report, right, you need to highlight that because it has a format, isn't it? To from subject date, then introduction, then headings of the answers, and then we start the work. So this topic is mainly from the non-financials, balance scorecard, right? So what is balance scorecard? A performance measurement tool or a strategy implementation tool, which looks at an organization from 4 different angles, right? Namely customer perspective, financial perspective, learning and growth, and internal business process, right? You can use it to implement strategy by way of bringing in measures through balance scorecard, and you can also use it to monitor performance with your current setup. Basically, you learning and growth, then that will improve your internal business process. When your internal business process improves, your customer will be happy because through those processes you are manufacturing good quality products and services and you are delivering it to them. And when your internal business process is good and customers are happy, you start making more money. So your financials will improve. So that's what we call strategy mapping, one thing leading to another, right? And balance scorecard has few, advantages and disadvantages also. So first part, now look at the way they ask. Explain what is balanced about the balance scorecard and how being balanced will help is to achieve its overall objective. Now, balanced means it is looking at all aspects, no? So they're asking, what are these all aspects? Take down. The balanced part is about looking at financial and non-financials, internal external data, internal external data, quantitative qualitative, right? And it looks at causes and effects. For example, customer learning and growth are what causes for the financials to result. Take a product, explain and write it. And second part of the question is, and how being balanced will help us to achieve its overall objective. How being balanced will help us to achieve its overall objective. So that is where you need to bring the mission into the picture. The overall objective of the company is to maximize what? Long-term return to shareholders, and it has used NP margin as its principal performance measure. The critical factors important to the overall performance have been recognized. Okay, take down. The overall objective of the company is to maximize the long-term return to shareholders. In order to achieve this objective, BSC, balance scorecard, BSC balance scorecard would help in identifying critical success factors and KPIs towards the achievement of the objective. Being balanced would mean, being balanced would mean the business focusing on both short-term profitability and long-term value generation. Now there you can give an example. You see, they say overall objective of the company is to maximize long-term return to shareholders, and Saffron has used net profit margin. NP margin is short-term. If you look at NP margin, you will try to put a smaller depreciation. You understand? Because you want to show a bigger profit. So then you are focused on one side. Whereas balance scorecard makes you what? Focus on both sides. Short-term profitability as well as what? Long-term value creation. Now that's what you mean by being balanced. So you can say, if the company is focused on net profit margin, then they are focused on the short term, which is not good for the long term. Another point you can say, for instance, investments in learning and growth. Investments in learning and growth can be linked to internal business process, internal business process and then the resulting the results in financials which will be captured through the financial perspective. Right, number two, Advise the board of the practical steps to be taken in developing a balanced scorecard for S from the strategy map. There's no need to identify specific measures of performance. Right, what would you say there? What are the practical steps to be taken in developing a balanced scorecard for S from the strategy map? Here you go. Implementing the balanced scorecard. For this, take down below. Choose the measures, define the report requirements, period are defined, people in charge should be managed properly, and rewards for achievement targets. Yeah. In developing the balanced scorecard, it is important to note that the scorecard should help achieve the overall objectives of the firm. The overall objectives of the firm. Suitable critical success factors. Suitable critical success factors. And KPIs should be chosen. And KPIs should be chosen, which will ensure proper monitoring and measurement of performance. Failure to link the objective with proper measures will lead to will lead to resource wastage. Right, next one. Evaluate the suggested performance measures in Appendix 1 with the constraints set by the board. Okay, now they have given us certain performance measures. Okay, auditors suggested the performance measures for the new BSc. Right. Innovation and learning, no measures. Okay, so we have to bring something in. Board instruction. The report should give an evaluation of the suitability of the set of performance measures as a whole, and then a detailed consideration of the individual ones offered. Now that is why they are giving you 14 marks. As this is an exercise from the board's viewpoint as a strategic decision makers, any new measures must be carefully justified in order to avoid overloading the BSc, and it is expected that there will be a maximum of what? 2. Ignore the innovation and learning perspective for this exercise. That is being considered separately. Now don't go and suggest 2 for the learning and growth. They are clearly saying ignore. Okay, so we need to look at only the first 3. Now you see, now this is the thing. We can't look at the KPIs in isolation. We have to look at it in terms of the critical success factors. Right? The overall objective of the company is to maximize the long-term return to shareholders, and S has used NP margin as its principal performance measure. The critical success factors important to the overall performance have been recognized to be utilization of capital, brand position in the market, innovation for competitive advantage. S board has decided to introduce the balance scorecard in order to align the organization with its strategy. Right, okay. Right. Can you make some notes about this financial perspective, customer and internal business perspective? I'll give you 5 minutes. Right. Now look at the first one. Utilization of capital. Under which perspective will you cover that? Financial. Utilization of capital. How money invested is being used. Now we'll go to the performance measures. First one, net profit margin. Write the equation. NP margin equation. Net profit divided by sales. Second equation is gearing. Write the equation for gearing. Debt divided by equity, or debt divided by equity plus debt. Now come back to the question. Evaluate the suggested performance metrics in Appendix 1 within the constraints set by the board. Evaluate means what? Positives and negatives of the metrics. First one is utilization of capital. These two ratios, will they tell you how you are utilizing the capital? Gearing will tell you how much capital is there. Out of that, what is your debt portion? NP margin will tell you, based on the revenue you made, what is your profit? Where is utilization of capital? Tell me equation for utilization of capital. Okay, EVA, return on capital employed, return on net assets. Now you understand. So you say the negatives of both of these ratios. Then you introduce 2 and say what is the advantage of that, because that directly addresses EVA and ROCE, directly addresses the utilization of capital. Understand? So you have to carefully, link. And then you talk about one advantage of EVA and one disadvantage of EVA. Here. No, don't come there here. No, NP margin you can say is subject to accounting this thing also. Yeah, those you can say. But Vadial Yandepa, because for 14 marks we need to balance all 3 perspectives. Say 5 each again. Another problem with gearing, now the company wants to go into equity capital, isn't it? Then what's the point in measuring gearing? Huh? Exactly. Yeah, if you want to keep borrowing to a minimum, then so then that means you're going towards for equity, There's no point in gearing ratio. Asset turnover and EVA are good measures. Right, next, customer perspective. Brand position in the market. That can come under customer perspective, no? Right? Brand position in the market. So they're trying to evaluate that through customer perspective. Number 1, brand awareness. Number 2, market share. What will you say? Brand awareness is important for brand positioning, isn't it? Top of the mind. So brand awareness is about how many customers know about my product. Now they are manufacturing TV, and it's very important for a technology-driven company because they'll keep on innovating products. So customers should know what new products are coming out. Now it's like Apple releasing the latest iPhone. They won't just release, no. They'll take some time. Coming in September. They'll start the campaign in January. Brand awareness. So they create that hype, right? Number two, market share. Very important. High market share would mean our position is strong. Right. Number three, innovation for competitive advantage. They are measuring it through gross margin, internal business perspective, isn't it? Time to market of new product lines, working capital cycle time. What is the first point you will say? They have three measures. We can't have three measures. We can only have two. Time to market of new products. Time to market. It is more suitable for learning and growth, isn't it? Not here. So make that comment. Time to market of new product lines will be more suitable under learning and growth. Innovation for competitive advantage. Gross margin. See, if your products are innovative, you will sell, isn't it? If your products are innovative and appealing to the customer, you will sell. And if you manage your cost, then your margin should be better. So to an extent, what it is measuring that objective, right? Then the working capital cycle. How efficiently are you managing your money within the business? I'll give you an answer for this. Take down. Gross margin and working capital cycle. Gross margin and working capital cycle do provide an overview. Of the efficiency of the production process, and the effectiveness of management of the capital in day-to-day operations. Both are financial. Both are financial and may be appropriate to use at the strategic level. However, there should be more detailed indicators at the tactical and operational levels. Gross margin, gross margin gross margin will help to look at the efficiency of production and more margins will help the company in other expenses. The other internal process to view here would be utilization of capital. And given this is already partly measured, by asset turnover, the measure of the ability of the business to control its working capital requirement through the working capital cycle is relevant. All right, last part. For the innovation and learning perspective, evaluate both the performance of S and the choice of measures suggested in Appendix 2. Innovation and learning perspective data. Number of product lines. Revenue is given, cost of sales is given. Above figures include the following for new products. Okay. Number of new product lines launched, revenue, cost of sales, R&D, staff education, R&D, consumables. Measures, revenue from new products, total R&D cost, degree of innovation with new product line, and advantage in time to market on the new proposed new product versus the competition. Can you first tell me which measures are appropriate? फुटबॉल सेंटर के लिए ठीक है हर एक इस तरह गेट में कम्युनिटी इतने और आगे मामले में enjoy. Right. So our perspective is innovation and learning, isn't it? Revenue from new products, R&D, degree of innovation with new product line, advantage in time to market on the proposed new product versus the competition. Firstly, too many measures, isn't it? We have to limit it to 2. Now, nothing looks at learning and growth, isn't it? Revenue does not, right? What is new product is also not clear, no? Now they have given the total. So if that is the case, how much relates to new product should be given, isn't it? And if so, the new product, does it mean it also includes new innovations? Huh? Yeah. Yeah, but then does it include new innovation? Right? Basically, it does not directly address the learning and growth part. That's the issue. And also whether special skills within the saffron team are improved, right? Technical skills, leadership skills, that is not measured, isn't it? Those are what mainly relate to learning and growth, right? And all are product based, isn't it? Take down this note. um, Firstly, there are too many measures and it should be limited to a maximum of two. It should be limited to a maximum of two. They focus only on new products. They focus only on new products. And do not address learning and improvement. In the production of existing products. In the production of existing products. Also, development of core skills. Such as leadership, such as leadership or technical skills within the company is not being achieved, or rather not being measured, is not being measured. Now what you have to do is, you don't have to, now they have given you revenue, cost of sales, no, then you can calculate the GP, isn't it? Right? But don't go to do it for all years, you won't have time. Maybe last 2 years, right? 2016, 17, right? And you can also calculate the revenue growth, isn't it? But what you must highlight is what you told me. Revenue is given, new product revenue is given, right? So how much of new product revenue is generated out of the total, right? And now when you say new product, for how long? Do we mean within 1 year? Now if you take now if you look at Apple's case, it's 1 year. No? But there can be certain other products, when they introduce a new product, it is there in the market for about 3 years. So then the 3 year revenue should be compared to, not just the money that you make in the first year. Understand? That new product's performance throughout its life should be compared with the overall revenue. Then R&D. R&D related to innovation. R&D can be on many aspects of the organization, right? Research and development. But for innovation, how much did we spend? So that needs to be taken as a percentage. Staff education, R&D of equipment, consumables. Consumables. Yeah, staff education you can take. Isn't it? That will relate to innovation, right? And upskilling, all that. Innovation and learning and growth perspective. So are the measures linked to that? That should be what should be running in your head all the time. Okay. Innovation can link to R&D. Yes. But that's the thing. R&D in what area? Degree of innovation with new product line. Okay, degree of innovation with new product line. How do you recognize that? For example, okay, you have this mic, right? This mic, let's say, can eliminate the outer noise. So you have invented that mic. But how do you know this is the best? Don't we have to compare that with another? And someone has to recognize it, isn't it? Then you can say my innovation is the best and I am innovating. So things like industry awards for innovation can come. Yeah. Yeah. Copyright patents which can be commercialized. Right? Otherwise, no point. No. Because end of the day, all that should relate to your mission of the organization, which is value maximization. That's the thing. Copyrights you can say so long as it can be what? Commercialized. Right? With HR card, increase staff education should increase with the money being spent. Advantage in time to market on the proposed new product versus the competition. Again, has to be linked to R&D innovation, right? The reduction in time, how fast are we introducing, right? So this will be quite a detailed answer.
The same throughout. That's not a sign of learning and growth. Things that have been here for 4 years.
That's a little tricky, What if the qualification costs are reducing? So you can mention that. If this would mean they are getting the same, then no point. Right? But in absolute value, if they are gaining more, then it's not a problem. Now compared to, ACCA compared to pre-COVID and now, you are getting the same ACCA, but the cost is double, isn't it? Something like that. But in a strong economy, cost would have become half. Then okay. Right. So with that, let me close it. Give me a reminder. I'll give you a proper answer for this question. It's a very tricky question, right? And next week I might probably do the session online. I will put a message. I'll text all the detail of the text. Okay, thanks. What is important here to notice how they test the questions. It's tricky. It's not very direct. Yeah. So you should be able to capture that. What exactly are they asking? And the level of detail that they need. Because now see, everything we have to go back to the scenario, try to understand the detail. Or we can't just go on giving generic answers. It has to be very specific because it's performance oriented. If the sugar is too much, what do? You understand? You address that issue specifically. Okay.
Then it kind of cascades down to final.
No, you will get the marks. You will get marks. You call it own figure rule. Now, like you said, okay, let's say your no pat is wrong. Only that part marks you will not get. Others you will get. Yeah.
If that result is from the paper, but for the individual items,
You will get marks. Even the EVA you will get marks. Based on your no pat, your EVA is correct. For that you will get marks. Yeah. For each one in APM, for every working you do, there's a mark. No problem. No problem. Whatever the correct figure in the cascade, you will get the marks. That's not an issue. Remind me, I'll show you a marking scheme.